MattyP hemorrhaging. There's blood on the streets.
It's just a flesh wound.
MattyP's got a cut on his face, everyone. Right. He got in a fight with the sign, and he won. MattyP took the sign down.
I don't know. The sign's still standing. And I skipped into it with as much force as I could. Hard enough to knock me down.
Was that Thursday or Friday? Because that would be even more ironic.
That would be funny. That was just last night?
Yeah, Monday night.
Oh, okay.
Yeah.
So you're on the healing then?
Yeah. Oh, yeah. So the sign won. Note to self, do not skip into signs.
A lesson that must be learned at some point, although most of us never have to learn it. But
you know, I'm great at learning things the hard way. So hard lessons are the strongest lessons. So, but yeah, I know there's something that it's on everybody's mind, and I can see it when I look at my TikTok For You page. And it's shifted to tariffs.
This is true.
So I don't spend a lot of time on TikTok. My 5 or 10 minutes a day, TikTok really hammers down what's going on.
Yeah.
So a shift to tariffs. Well, what's up, everybody? You are here at the HIG podcast. I'm MattyP, here with your host, Bronson Kaufusi. What's up, Bronson?
What's going on, everybody?
And
Good to be here.
We have a special guest again with us who speaks so well to so many things that are going on right now. A couple weeks ago, we had him on, right?
Yep.
Right, Bronson? Talking about inflation, a confused market, just kind of the stuff that's going on. But since that episode was published, a lot has happened.
Well, it's because it's 2035. You said that's when I'd come back next.
Oh my gosh, yeah, that's right. Holy cow.
A decade. We got him back.
Future.
This is, he's from the future. Man from the future. Tell us what's going to happen with the tariffs then.
You look the exact same as you did
I
10
look
years
just
ago.
like-
You
yeah.
actually look better.
Yeah, thank you.
No, but yeah, Bronson, you mentioned the tariffs that we talked about last time, and that's been a hot topic, and so that's why Matt's here again.
Yeah, we want his expertise because he's watching the markets. I mean, you did this for so long on Wall Street. First of all, we got to remind everyone, Matt was on Wall Street over 20 years. And so your background and what you're seeing is going to be so unique compared to everyone else. So we'd love just to first just hear your kind of general take on the tariffs. You know, what's going on, how it hit last week, and how the market, responded, and kind of where we're headed. So
Yeah. Well, it's definitely been a heck of a week, that's for sure. And I did learn a lot of things on Wall Street, but one thing I didn't learn about were tariffs. I mean, we haven't had to deal with this since
a long time.
100 years ago.
Yeah.
In
That's
this
true.
type of scale. So it's very interesting. Now, that said, there were a lot of things that I learned in reading the markets and trying to understand why they're reacting. But just taking a step back, the tariff conversation is obviously incredibly interesting. I don't want to talk with a political bias. That's not where I'm going to come from right now. Let me talk in a way that suggests that all parties are doing things for a strategic reason, that they have a good cause, that there's nothing nefarious there, and with no political angle. Okay, but let's just talk about the tariffs and what we've seen so far, the reaction of the markets, and what we could expect. But look, no textbook recommends tariffs, right? In a perfect world, there would be no tariffs. If you were to go political, you would say that the Republicans especially would feel that way. Mm-hmm. Now, why is this happening? Why would Trump be pushing this? I think the main reason why you would guess that he may be pushing this is purely a leverage strategy conversation. There needs to be some leverage tool to get what he wants, and this is a way to get that. I think that is the best rationale for why this is happening. There's obviously imbalances in the world, in part from tariffs by other countries that are put on us.
Yeah, we have a lot on us.
And there are definitely tariffs that are put on us. I think looking at this VAT and classifying them as tariffs and things like that, I think that's very debatable. But there are definitely imbalances. And again, thinking from a positive perspective, a desire to have a strong United States of America, as the president, that's definitely something that you would want, right? That's something that you are put in power to do, to protect us citizens. And so again, going back to why these tariffs are being implemented, I would think that it's mainly from a strategy perspective, from a leverage perspective. There's something that's wanted, and this is the tool to obtain it. When we think about tariffs and making America a stronger economy, a stronger production, from a domestic production standpoint, can this bring jobs back to the U.S.? In order for that to occur, we need to have stability. We need to have a clear roadmap of the rules that are going to exist for the next couple of years or for a time period. It's tough to think that a producer right now would make a decision to bring jobs back to the U.S. based on the commentary that's going on right now. Mm-hmm. There's definitely the question of how long will these tariffs last? And the problem when you implement these broad tariffs, it's 10% on everything. It's 45% on everything from China. It's 50% on Vietnam. It's not isolated in nature. That's a problem. It's a problem from a let's bring jobs back to the U.S. perspective, okay? It's a problem because what you'd really want to do is say, what's an example? Australian beef. That's been brought up as an example. Australia won't buy any of our beef. And so we're going to implement a 500% tariff on Australian beef. That makes sense. Or if you say we want to protect the automobile market or the rare minerals market, because we want to be able to produce batteries for electric vehicles, and China is dominating that market. So you implement specific tariffs in order to protect that, and those make sense. And for manufacturers, you could see the logic behind there being staying power behind that tariff for a long period of time. But when you go and you just broadly implement tariffs, CEOs, board of directors are going to question the staying power of those tariffs. And if I decide to bring a manufacturing plant online, that's going to take 12 or 18 months to bring online. Will those tariffs even exist? Will this regime be in place in a couple of years? And so tariffs in the way that they are being presented today, I think it's just clear cut that anyone would argue that they're not going to result in U.S. jobs or manufacturing that's going to come online.
Yeah.
But again, I'm trying not to be political here. Why then would somebody like Trump still push forward with that? I've got
interest rates?
Well, there's definitely there's a theme out there that create a recession, drive down interest rates. Mm-hmm. Okay. Thinking positively about this, why Trump may be doing it, it's just there's a strategy that is broader than this. Mm-hmm. And I've got to think that there's definitely a trading dynamic and these levers that he wants to pull that could have a very positive outcome. I just don't think it's going to be the outcome of manufacturing comes back. We're not going to be...
Because it's already set.
It's already set. We're not going to be manufacturing DVD players. We're not going to bring back the textile industry from Vietnam. We have to accept the fact that Americans live a certain standard of living that demand a certain income level. We don't have Americans, by and large, that want to work in a textile factory. Quite frankly, we don't have Americans, by and large, that want to work in agricultural fields. Yeah. We can't pick crops manually and support our lifestyle. Mm-hmm. We need immigration to help with it. There are...
And money's expensive right now, so you're trying to figure out how do we...
Money's expensive, yeah. So it's this tangled web of... If we just peel the onion back, there are different ways that we can make America a strong country.
Yeah.
Again, thinking positively about the objective in the presidency and why these things are being talked about, I can envision a scenario where there are certain objectives that want to be met. But let's be clear, the objective is not, let's bring back textile manufacturers here. The objective isn't, let's have Americans do more very low income jobs.
Yeah.
It's just not...
It's not the play.
It's not the play. There's another play behind it. There's another play.
Here's a question for you. So I've been watching these updates because what you're talking about I think is really interesting. So these tariffs go down. Now these countries start lining up to come meet.
Mm-hmm.
What best case scenario, what happens when they walk out of that room?
Yeah.
Like best case scenario for America and the markets, honestly. Like
yeah, absolutely. So the best case scenario is, it just goes back to what are the objectives of the United States, whether it's from a security perspective, whether it's from let's think about the immigration story, right? And there is an objective to secure the borders and to minimize the immigration patterns. And obviously there are different scales to which different political parties want that to occur, right? Nobody wants the bad apples in here. Nobody wants the bad immigrants in here, so to speak, right? The ones that are criminals. No Democrat wants that. But there is a spectrum as to the tolerance level of immigration. But to the degree that Trump could utilize this lever to say to certain countries, you're going to take our plane full of immigrants that we don't want, that don't fit the profile, that's perhaps a lever that could be pulled. There's a national security perspective here. What's going on with China? What's going on with Russia? Who are their allies? Who
those markets specifically too.
And those markets and those countries and interacting specifically with those countries. Yeah. And how do you achieve those objectives? And thinking about trade, global trade is a very powerful and influential tool.
Affects everything.
It affects everything. And so to the degree that this can be utilized in order to achieve those objectives, tariffs could be utilized right now to achieve a security objective that the United States wants to achieve. Yeah. That's a possibility.
Yeah. What about on the market side? So I know you're saying security for the country.
Yeah.
What about security of the markets? Like how do you think that could play out?
Well, I think that first off, security is not just military, right? There's now a cybersecurity element here and how that influences things. But now if we look into the financial markets, because that's we're a financial company, and how does it impact interest rates and how does it impact equity markets and bond markets and the like? Well, let's look at what's happened in the markets, in the equity markets and the bond markets. The equity markets have sold off dramatically. I made a comment in the last podcast a couple of weeks ago that the market was confused. I pointed out some trading patterns that were occurring that did not correlate. Yeah. And we've seen that again. So what's happening? There are two big levers right now. It is tariffs, their impact on inflation, but then could a recession occur?
Yes.
Yeah. Right? So if tariffs just leads to inflation, but we still have some modest growth, then we're concerned about interest rates rising. Yeah. You made a comment of, well, maybe one of the objectives is to lower interest rates. How would tariffs lower interest rates?
Recession has to hit.
It would be through a recession. That's exactly right. It would be through a recession.
Which define recession for us, just for people that are listening.
2 quarters of negative growth is the textbook definition of a recession. Many are questioning whether we are already in a recession. If you look at the earnings of certain retailers, if you look at the airlines are a great indicator. Yeah. Airlines have been talking about weakness within their industry for multiple months now. Earnings estimates are coming down on airlines. If you look at certain hospitality sectors, there's signs of weakness. This is before the tariffs. So there is already a question as to how the economy is doing. Yeah. Surely tariffs are a negative to the economy. Again, there's no doubt about that. They are a negative to the economy in the short term. And I made the comment in the last podcast that, again, even if these tariffs will produce a long-term gain, you cannot dismiss the fact that short-term pain is going to occur.
It's going to hurt.
There's just too much. There are too many imbalances. There's too much to correct, too much to overcome, that you could do it in a gradual way. And so I can appreciate a rip-the-Band-Aid approach. Just a meaningful change needs to occur in order to achieve the overall objective in the long run, in the medium and long run. Yeah. So going back to the markets then, how have the markets been reacting and what's going on? So first off, the markets say to themselves, this is a negative. Okay, this is a negative that we are going to have a slowdown in global trade, in global growth. And then there's a question of who does it impact more? Does it impact the U.S. more than international countries? And that's an interesting conversation when you start to talk about the leverage that we have. Because if it hurts the U.S. more, then theoretically we don't have as much leverage. But if it's hurting the international countries, more than it is the U.S., and that very well is the case with many countries, especially when you see a concentration in where GDP is generated from. Yeah. You know, I've brought up the textiles example, but if you see in Southeast Asia, a lot of textile sensitivity, whereas we talked about Europe and COVID years ago, Greece, you have certain countries that are tourism based, right? And when you have this concentration in a certain GDP driver, well, all of a sudden cutting off that main concentrated angle can really hurt a country. The US is diversified. From our GDP generation. And so that's a positive. So you could understand that international countries, other countries are going to be hurt more than we are, which could give us leverage to achieve whatever the long-term objective is.
So it's leverage. Truly leverage is the outcome that we're seeking.
If you want to think about this positively as to why you would implement tariffs, that to me is really the only justification for it.
Leverage to
achieve something else.
Yeah, achieve something else.
Which, what does the U.S. want? You have to just go back to it. What does the U.S. want? And we talked about that. And we don't know. I mean, maybe there are other things that we're not thinking about. Maybe there are smarter people in the room that are anticipating issues that will arise over the next few years, and they're getting in front of it. I don't know. But if you look at how the markets reacted, it was a negative. The equity markets sold off. The bond market rallied. Interest rates went lower. Now, why did that happen? You have this risk-on, risk-off trade that occurs in the markets. Equities go down. You go to a safer place. That is bonds. Right? Bonds going up means interest rates are coming down. So were interest rates going down because the market was anticipating a recession? Or were interest rates going down simply because it was a risk-on, risk-off trade? That's question number one. I would argue that it was probably a risk-on, risk-off trade. But now you have this conversation, this dueling path of if tariffs create inflation, which they do, right? And how do they create inflation? Obviously, they create it simply because the cost of the good is greater, right? Because there is a tax that is placed on it, right? It's the U.S. importers that pay that tax, that pay that tariff, and have to pass that cost on, or a large degree of that cost. So obviously that causes inflation. But to the degree that now a U.S. manufacturer sees that their Chinese competitor now has a higher cost structure because of the tariff, now maybe the U.S. manufacturer can raise their rates that they charge. So again, let's just...
Because they're going to have to raise their rates to cover the spread.
Well, let's go to a hypothetical and non-realistic example of a DVD player, because I don't think there is a U.S. company that produces DVD players. And quite frankly, as I say DVD players, I guess I'm showing my age because maybe...
What's that?
You didn't know what a DVD player is.
At least there's got to be VCR.
There's got to be a better example. VCR.
Let's go to VCRs, says an example.
VCRs. So if it cost $10 to produce the widget, the DVD player in China, and it costs $15 in the US. But now the Chinese manufacturer has a tariff placed on it, which let's just say it's 100% tariff. So now it's at $20. Why wouldn't the US manufacturer, who was selling their item at $15, raise it to $19, to $19.50, to $18.50? You know, below what the Chinese cost plus tariff is, so they can get the sales. But why would they keep it at 15? They'd raise that. Now maybe they'd pass that on to their employees, right? Give them raises. Just to go down this rabbit hole, you may say, wow, that's gouging. That's not a good thing that the U.S. manufacturer is doing. They're taking advantage of the situation. Well, maybe the U.S. DVD player manufacturer was running on slim margins for the past 5 years because Chinese companies were able to produce it so much cheaper. And so now they're just going to a normal margin. Maybe it's not even a nefarious or bad thing that the U.S. manufacturer is doing. They're just saying that the markets are now fair in their perspective. The cost of production has now been normalized. It's now a fair market. let me get a normal margin. So it may not even be a mean thing that the U.S. manufacturer is doing. But man, shouldn't we expect that the U.S. manufacturers are going to raise their prices if they have the ability to do it, because now imports are more expensive?
Which could stimulate
growth. Could stimulate growth, but it could also get the inflation train happening again, right? Because more profits get passed on, hopefully some positive to the employees. The employees have more money, spend money, multiplier effect. So there is a real consideration as to how these tariffs could trickle down and cause more inflation. Not just the initial lockstep sticker increase from 30% tariffs and 50% tariffs, but the trickle-down effect as you see U.S. manufacturers react to the increased pricing of imports. Okay, so that's one. But then you have the further conversation of, will a recession occur? And if a recession occurs, and I think I mentioned this in the last podcast, it's just unrealistic to think that inflation will happen as a meaningful recession occurs. Now, you're probably thinking to yourself, stagflation, Bronson.
That's what I'm thinking.
That's what you're thinking. That's what you're thinking. So,
talk to us.
Yeah, so there is the scenario of weak growth or muted growth, slightly negative growth with inflation. That can exist. But we are talking about, well, at least in the past week, in the rhetoric and not just the rhetoric, but what's coming out of the White House, it's not 10% tariffs and 5% tariffs. It's 50%. It's 90%. There's a retaliatory stance that's being taken by China. And so we're talking about numbers that should drive a meaningful recession. It's not going to be negative 0.1% GDP growth or loss for 2 quarters. We're talking about 1%, 1.5%. I don't know. I'm not an economist. It's just we're not doing middle of the road things with tariffs.
Yeah.
We are doing extreme things.
Mm-hmm.
I would guess that it's only a matter of weeks that there becomes a lot of reformulation or refinement of these tariffs. I would think that it's only a matter of weeks that this leverage game and maybe whatever else is wanted starts to become apparent. We're already seeing Republicans being very fractured in their thoughts about tariffs, and to the extreme that this is being implemented. We're seeing Trump's own cabinet. And look, let me just go back to a non-political comment. You could think Trump is crazy. There could also be a genius behind the craziness of what's going on in the U.S. Have you ever dealt with a crazy person? How do you deal with a crazy person that you can't predict? And again, let's just assume the best, that this is a calculated craziness that's being generated.
Which turns into genius.
Which could turn into a genius, right? I'm not saying
you never know.
I'm not saying it is. I'm just saying it's a possibility.
Yeah.
It's a possibility that you act this way, cabinet member, and you act that way, and let's say some crazy things, and let's get all of our counterparties being like, what is going on? And let's get the countries that are being impacted the most line up and say, what can we do to be on your side and to be a solution?
Which is happening kind of right now.
Which we're seeing some of that happening.
Yeah, a few days.
We're seeing some of that happening. So again, this could just be a crazy person doing wild things that in an uncalculated fashion. Or it could lead to something positive. I don't know what will happen.
Time will tell.
Time will tell. I just know that right now, bringing it back to the markets. So what do we have to look at and how do we react? Nobody liked the data-dependent comments that the Fed gave, right? And regardless of your thoughts of the Federal Reserve, there is no way that you can make any type of prediction about interest rates right now.
Yeah.
I'm sure economists are doing it.
I wish we could know.
But yeah, it's impossible.
It'd help about what we do.
Yeah, exactly. It's impossible. I think that the highest probability item is a recession to some degree because we may already be in one, a mild one. And as far as how you react in these markets, this is not a sustainable setup of exaggerated tariffs.
You're saying it's not going to last.
It's not going to last. Now, I don't know if it's days, weeks, months, but it's not sustainable and something will change. So I don't think that you adjust your portfolio assuming this type of backdrop remains for any long period of time, which would actually suggest that it could be a buying opportunity.
That's what I was about to say. I was like, hey, blood in the streets.
It could. And MattyP knows a thing or two about that. So it could be a buying opportunity. Now, the flip side, the negative side of it is when you deal with a crazy situation, a crazy
that's extreme
backdrop, an extreme backdrop, who knows how people are going to react? Who knows how defensive certain countries will be? China, Russia. Who knows the ego play? And again, I'm making a comment about countries right now and not people. United States is a proud country with an ego.
Yeah.
China is a proud country with an ego.
Yep.
Russia is a proud country with an ego. And when you start trying to force situations, and when you start trying to adjust allies and trade partnerships, that's a big deal. That is a very, very big deal.
It goes all the way down to the consumer. That's what it trickles down to.
I mean, the consumer's driving it and the consumer impact, but you just don't know how this could play out. I'll summarize and then I'll shut up.
But no, keep going. This is also good.
Yeah.
What we are doing right now is we are doubling down at the casino. Okay? We are doubling down. This is a risky strategy. And when you double down and you win, you're seen as a genius.
That's true.
And it's a really, really good life. But you're not, this goes back to my comment of this is not middle of the road stuff right now where you're hedging yourself. You are exposing yourself. The United States is exposing itself in taking a stance. When you do that from a proud country, you don't backtrack the next day. You don't.
Right.
Yeah.
You want to showcase that you've achieved something with your strategy, assuming it's a genius strategy, right? And even if it's a genius strategy, it doesn't mean that it's going to work, okay? But it could still be a calculated genius strategy. But you want to see something happen. So we are doubling down, and if it doesn't work, unfortunately, that means that
ramifications.
It's negative.
Yeah.
It's negative, and there's plenty of room to go lower. So now let's just connect the dots here. If you're saying that it's a double down scenario, but I also made the comment that this tariff backdrop isn't going to last forever. There's a scenario where in a few weeks or many, many days, maybe not even a few weeks, that there is a backtracking, but it can only be to a limited degree. You could say, all right, I did this tariff on 90 countries. Let's whittle it down to 60 or 40, and then let's start to refine exactly what the tariff is about. It's to preserve batteries and rare minerals, and it's to, for the auto industry. And so you start to go into these very specific areas, but that will still be negative. That will still bring about a negative short-term reaction.
Interesting. So we're in a unique time, everybody who's listening to this. This is really interesting. It's almost like you just have to kind of buckle up and let's see what happens.
Yeah.
Just kind of exciting, but also
time will tell. It's been interesting to see how different countries have either reacted or responded. Some come back with 100% tariff. Some come back with a desire to meet, to negotiate.
Yeah.
Come to middle grounds.
Yeah, we'll see how it plays out over the next couple of weeks. It's obviously very important to follow that, Matt, like you said, to see how the countries are lining up. And it also gives the U.S. The ability to say, look at what we've been able to achieve and that this was a smart move. And
well, however it plays out, we'll be here to talk about it. We'll be here to give you some updates, to discuss the confusion or
opportunity.
Yeah, this is normally not a time to be making drastic moves in portfolios. It's normally, but it could be a good time to reassess and just to understand how marginally things could be adapted given the market. And then there needs to be a decision on the longevity of this situation. And again, the longevity doesn't need to be a year of these tariffs being in place. It could just be 2 or 3 months, creating a domino effect that we can't easily recover from. And so if that's the case, then one may decide to make more meaningful changes. I know here at Harris Investment Group, although we're following this closely, fortunately, the banks haven't adjusted that much yet what's going on with their lending. And if you think about domestic demand in some of the areas that we're in, it really shouldn't be impacted that much. And so you can stick with the current game plan that you have. Right? And you can have optimism that over a multi-year cycle, this noise won't really create any permanent impairment, so to speak, on the portfolio. But that's not the case with everything. And we talk about leverage can be difficult. And so if you're in the markets in a levered position using margin, things along those natures, if you're inclined to make short-term bets, do so at your own risk, because it's not really the good time to be doing that.
Interesting.
Dang, I love it. I can talk about this stuff all day. So interesting to me.
Yeah, it's always changing too.
It is always changing.
Yeah, there's a lot to learn.
Yeah. Dang, that was great.
Well, in 2040, in 5 more years, we can talk again about what's going on.
5 more years. Look at the time traveling, man.
Time traveling, Matt Benning here. Not only is he a CIO, but he is also a time traveler.
We all have our skills.
Well, that was awesome. Thanks for hopping on with us. I'm sure we'll be having, as things start to go, we're going to keep pinging you. You ping us when it's time to get on, and let's dice it up. And people should ask you questions, so reach out to us. Contact at harrisinvestmentgroup.com and ask Matt some questions, because it's nice. We can just come sit down and ask you some questions to shed some light for some people.
We can take some guesses as to what will occur. Absolutely. Well, thanks for having me, guys.
Yeah, thanks, Matt. It's been great. Oh, hope you find your dad. I forgot. I need to throw that in there. Yeah,
he's out there, but he's getting tariffed. So.
The HIG podcast expresses the views of its participants and may not represent the views of Harris Investment Group. The views discussed are subject to change without notice. The HIG podcast has no duty or obligation to update the information contained herein. It should not be assumed that past investment performance discussed is an indication of future results. Wherever there is the potential for profit, there is also the potential of loss. This is the very nature of investing. The HIG podcast and its affiliates do not provide tax, legal, or accounting advice. The information shared on this podcast should not be construed as an offering, advisory service, or investment advice. Consult your own tax, legal, and accounting advisors before engaging in any transaction. This podcast, including the information contained herein, is the sole property of Harris Investment Group and may not be copied, reproduced, republished, or posted in whole or in part without the prior written consent of Harris Investment Group.